Today the Fear and Greed Index stands at 70, signaling strong greed in the market. That level has historically accompanied rallies, but it can precede sharp pullbacks when momentum shifts. Crypto traders are watching price action as liquidity remains robust and buyers stay engaged. With greed on the dial, new entrants may chase momentum and push Bitcoin and the top altcoins higher in the near term. Yet the risk of overextension is real, and a sudden catalyst could spark a correction. For longer-term investors, use this reading to manage risk, diversify, and stay disciplined. For portfolio managers, it's a reminder to rebalance risk and consider hedges during extended upswings. Bitcoin is trading with renewed vigor, lifting toward the $120,000 mark as U.S. regulatory cheer fuels optimism across markets. The latest move is framed as a response to clearer regulatory signals and potential endorsement of mainstream crypto strategies. This could lure cautious investors back into risk assets. In the short term, the burst could propel BTC higher as buyers chase momentum and institutions reallocate. In the medium term, sustained upside will depend on continued clarity from regulators and competitive pressures from players such as Ethereum and the broader altcoin space. If profits take hold, expect pullbacks and consolidation before the next leg up. Markets will remain sensitive to policy signals and macro data. BNC has revealed a significant Treasury move, buying $160 million worth of BNB tokens for corporate reserves. This signals growing institutional interest in exchange-native assets and in using them as a treasury tool beyond Bitcoin. If more corporates diversify into BNB, demand and liquidity for the token could rise. That could support a steadier price floor. The move also highlights how treasuries are expanding beyond Bitcoin, a trend that could attract more risk capital into the sector. On the negative side, concentration in a single token could add systemic risk if regulatory treatment shifts or if the BNB price falters. Investors will watch for follow-up moves and regulatory clarity. Bybit has launched a promotion offering Latin American users a share of 30,000 USDT for first Bitcoin purchases, signaling continued efforts to expand onboarding in key regions. Promotions can boost short-term liquidity and trading volume, especially among newer participants, potentially accelerating local market activity. For the broader market, this can translate into amplified intraday volatility as newcomers dip their toes into Bitcoin. In the near term, look for a liquidity bump and a spike in micro-trading opportunities. In the longer run, sustained adoption will depend on regulatory clarity and ongoing education to convert promotions into lasting participation. Heritage Distilling has raised $220 million to build an IP token treasury strategy. It's a move that blends traditional branding with crypto finance. The company aims to tokenize IP assets as a treasury resource, creating a dynamic pool to fund growth and resilience. If successful, this approach could open new doors for licensing, IP-backed tokens, and cross-industry partnerships. It could potentially expand the crypto financing toolkit beyond pure asset trading. However, the strategy is unproven at scale. Execution risks include regulatory scrutiny, valuation challenges, and the need for robust governance as real-world assets enter tokenized form. If the program gains traction, it could draw more attention to tokenized IP as a treasury model. Aditxt has signed a custody agreement with Crypto.com for its digital asset treasury. The deal signals growing demand for secure custody solutions, as companies expand crypto holdings. The partnership could improve reliability for corporate treasuries and ease compliance for firms looking to allocate capital to digital assets. For the market, more custody deals translate into higher institutional participation and a clearer pathway for mainstream adoption. Risks include operational risk if custody providers face outages or security breaches. Still, this agreement reflects a broader trend toward professionalized storage and governance in crypto finance. The deal also sets a baseline for governance and audit trails in digital asset programs. Analysts are signaling strong momentum for pudgy penguins, as the PENGU meme coin appears set for another leg higher. The call centers on a bullish cup and handle setup and improving fundamentals, with rising 24-hour volume and growing community activity. While meme coins can deliver quick gains, they also carry high risk from sentiment shifts and regulatory scrutiny. For the broader market, a rally in PENGU could lift risk appetite in small caps and altcoins, attracting new traders seeking quick wins. But investors should manage risk and avoid overexposure to a single narrative token. Speculators should stay cautious and diversify across assets as part of risk controls. Executive insights debate whether the adoption of Ethereum treasuries could threaten Bitcoin dominance. Michael Saylor and others argue that, while Ethereum treasuries are growing among corporate buyers, Bitcoin remains the primary store of value and risk management tool for many institutions. The conversation signals that multi-asset treasuries are becoming a mainstream trend, which could widen the crypto funding base and increase volatility in the near term. In the long run, diversification could reduce downside risk for portfolios and push broader adoption. Still, regulatory shifts in market sentiment will shape how this trend plays out. The discussion also calls for clearer disclosure from issuers and investors. Tron is reporting a near-perfect year in 2025 for transaction success, a metric that underpins confidence in the platform as usage climbs. Analysts point to reductions in failure rates, faster processing, and growing activity across decentralized applications as drivers behind the trend. If Tron sustains high reliability, it could attract developers and users seeking a scalable alternative to older networks. The potential impact on the broader market includes increased competition among Layer 1 chains and possible capital flow into Tron based on reliability alone. However, broader demand will also depend on ecosystem maturity and developer incentives. In the coming months, this reliability will be tested alongside user incentives and network upgrades. Bitcoin is pushing toward new all-time highs, as early pre-sales and green candles signal renewed buying pressure. Analysts note a fresh wave of optimism following months of consolidation. Price action shows persistence. That context is part of a broader crypto rally that could lift sentiment and attract risk capital from institutions and retail traders alike. If Bitcoin breaks the next resistance level, momentum could carry prices higher in the near term. Watch for profit-taking and the risk of a pullback after rapid gains. In the longer term, halting momentum would require macro support and continued demand for digital assets. Investors may plan exit strategies and stay aware of leverage risk. An Ethereum coder known as Feed's intern was detained in Izmir amid Turkish investigations into network exploitation. The development community is watching closely for details about the case and potential implications for open-source projects. The news underscores governance and regulatory risk in crypto. It's unlikely to halt overall activity if proper safeguards and compliance measures are maintained. For investors, the short term could bring volatility and headlines. In the medium to long term, there could be emphasis on secure coding practices and due process in blockchain research. In the long run, the community may push for stronger security research and compliance. Cocoa futures surged on concerns about weaker crops in West Africa. This highlights how macro commodity shocks can intersect with risk sentiment in crypto markets. The direct price impact of cocoa may be limited for digital assets, but broad market stress or inflation signals can influence liquidity and risk appetite among traders. If investors reallocate from risky assets during commodity surprises, a spillover effect could weigh on crypto while the macro picture remains unsettled. In the near term, markets may wobble as traders parse food supply news alongside crypto headlines. This cross-asset sensitivity could extend to digital markets during shifts in inflation expectations. For Remington Hotchkiss, finding a real product to sell was the hard part, even with a strong business plan. The story highlights early-stage realities that many founders face when evaluating a market for new ideas. These include customer discovery and capital needs. The takeaway for crypto readers is to watch how founders translate ideas into scalable ventures and whether venture funding aligns with crypto adoption in practice. In today's markets, a compelling product can unlock partnerships and liquidity, while weak execution dampens momentum and may drive investment elsewhere. The takeaway for crypto founders is to prioritize customer validation and scalable go-to-market plans.